Hey, it's Clay at ClayTrader.com. This will be the weekly recap of the Power Profit Scan newsletter, which is a part of my Inner Circle subscription service that I offer. And before we get started, a few disclaimers if you've never watched any of these before. First off, am I trying to imply that every single alert that I send out is a massive winner or a winner at all? Absolutely not. In fact, if you've watched past videos in this series, then you've seen I've shown losses, I've shown trades that aren't exactly smooth, and I've shown a good variety. But still up front, I don't want this to come across like I'm trying to portray every alert that you will get is a winner. I am not perfect. No scan is perfect. Nothing is perfect. There is no holy grail in the market. So losses happen, which brings about the exact focal point of why, at least around the ClayTrader community, risk management, risk analysis, risk control is so important, because losses do happen. However, on the flip side, winners also happen. So when those winners do happen, you want to make sure that you have systems and strategies in place that put your account in the best possible position to benefit from those winners when they do happen. Because that's the good thing about the coin is while losses happen, yes, winners also occur, but you got to really focus on making sure those losses don't spin out of control. Second, we are going to be going back and looking at the week of February 4th. Why so far back? That's a more than valid question. Two reasons. First, it's simply giving the chart plenty of time to play out. That way we can see what's actually happened since the original alert was sent out. Second, it's just a matter of being fair. I mean, this is a paid subscription, so the last thing I would want is for somebody to pay for something and then see it all out there for free, because that person, I think, would feel more than justified to think, hey, I feel ripped off. So that is the two reasons why we're going so far back. So with that being said, let's get to it. And a quick note here, what you see on the screen is just behind the scenes. When you log into your Inner Circle subscription account, there's an area where you can go to the newsletters, and then you have them all listed right here. I also send them out via email, so it's a situation of whatever makes your life easier. If you just want to check your email, perfect. If you prefer to just log in, that works too. It's all about making life as efficient as possible on your end. A couple questions that I get quite a bit is probably the most popular. Clay, what price stocks are you covering? What exactly is going on? And I cover prices across the board, and that's why I'm pretty excited about this video, because you're going to get a good example of that. Price is very low down on my priority list. I care about just the factors that are going to boil into what do I think is going to make this have a high probability of success, or yeah, that's not really a high probability trade. So that is my main focal point. What's going to be the attributes, what's going to be the characteristics that give this a higher chance of success, and price is very far down that list. So just kind of keep an eye on the prices as we go through it. And then second, when are these sent out? These are sent out every weekend. So like I was just getting done saying, every weekend, usually on Saturday mornings, you're going to get an email, but you can also just log into your account and access those through the member portal too. So whatever makes your life easiest. But first, what we're going to talk about is ticker symbol CVS. And as you see up here, trend line bounce. And back to the whole price thing, I mean, we're talking about a $65 stock. So this is a quote unquote big board stock, blue chip, whatever you want to call it. So we're going to start off in a price range like this. And as you see, I mapped out, essentially this pattern right here. And, just talked about how you had a nice little candle right at that trend line. So let's see if the price could potentially bounce up to there. And the other thing to note, and a good little lesson here is, always make sure you check for those binary events such as earnings, because CVS did have earnings coming up. It wasn't any time in the near future, but one of those things where you always want to make sure that there's, nothing, there's an event out there that, that you should take note of. And one of those events that's predictable is there's always earnings, and that's not something that's going to catch you off guard. It's always published ahead of time. So just understand that earnings, was coming up on this one, but let's see how it played out. So again, this is sent out over the weekend, and this is what it looked like the next day. You'll see will be, that Monday morning. So you can see right there, I mean, nothing crazy. And kind of just still amazes me. Pulled back and look right where it bounced off of. Now, I'm not basing any calculations off of you playing it perfectly right there. So, don't get me wrong. The calculations are not like best case ever scenario. So just watching. But if people wanted to get in this one for the trend line, or people that trade options, so you could definitely, trade some sort of option to go with this. So I'm not saying you have to trade the stock, itself. And if you have no idea what I say when you could trade the options on it, that's totally fine. But that's just another part of the market known as the options market. So that, there's a couple different ways you could play this from either the stock or, like I said, the options point of view. And you can see right there, Finally, the bounce starts to arrive. And you can see right there the price eventually works its way up to that high. Now, this is where the learning lesson comes into play, and I should note that right there is 8.2%. But before I even get further, let me just put that 8.2% in context. So how long did this take? Let's just call it 2 weeks, give or take. 8.2%. Here we are looking at bankrate.com and just looking at, the CD rates out there. So what's fascinating to me is, this week's national averages. 1-year CD, the national average, 0.88%. 2-year CD, 0.94%. 5-year, 1.44%. Well, Clay, that's just the average. All right, fine, fair enough. Let's just go down here then and look at some of the more localized, at least to me. But whoops, that's not what I meant to do. There we go. Sorry about that. Okay, fine. 18 months, a year and a half, or let's just go at a year. 2.7% for an entire year. Keep those numbers in mind. 2.7% for an entire year. And that's considered like one of the really good ones out there. But let's get back to the CVS trade. So yes, 8.2%, maybe not necessarily huge, but when you think about it, it's a big board stock. There's plenty of volume out there, so you could have taken a relatively big position. I'm not saying you would have to, but some stocks you can't pour in a bunch of money because when it comes time to sell, that's going to be kind of difficult. But with something like CVS, plenty of volume. It does tens of millions of dollars every single day. But 8.2%, so a great move right here. However, the learning lesson, and remember, keep in mind binary events. And this is when the earnings are coming. And it's amazing how the price is literally sitting right up there at that resistance that I mapped out right before earnings. And while I'm not saying you have to totally sell out, if you don't like to hold through earnings, well, then this is where you would be, getting out. Somewhere right up around here, right at that resistance, so a very solid trade. Or if anything, remember, partial sells. You could always sell half of your position, and that would at least keep you, all right, well, let's see what happens with earnings, but at least I've locked in some of the gains because you can see the earnings right there. There was the gap down and, essentially right back to where it started and a little bit lower. So even if you had, let's just say, done a partial sell and sold half, that still would probably be a winning trade, a small winning trade because, that would have gotten you. But, by selling half up there, that would have helped out quite a bit. But, or if you would have just held out, that's why some people don't like to hold over earnings because it is one of those binary events that you just don't know. But when you always take note of things, what's in the future, then that's going to kind of help you dictate your trade management strategy right there. But as far as, the bounce off the trend line, like I said, still amazes me to this day how charts work. Bounced off the trend line, got right up to that level of resistance that I mapped out right before earnings, and then, that all played out. But overall, great trade. The next alert here was just in the volume alert category, ticker DRQ. And as I pointed out here, absolutely huge volume, and then like nothing happened. I guess a little bit happened, but as I know it up there, huge volume and the price barely budged. I like these types where it makes things that make go, worth at least watching. So let's see how this one played out. And before I forget, now keep in mind the price range we're looking at. We were just talking about a $60+ stock. Now we're talking about a stock that's down here in the $30 region. So let's see how this one played out. I will say that for any of you ClayTrader University members that watch these, I am going to be doing this example here, exactly how we, so we're going to build a trade plan around it because this is a good example of how, when you know what to look for, this one served up a trade plan like on a silver plate, very straightforward. So if you are a member, then be there this Tuesday night live and we're going to go over it. But as far as this is concerned, all I will say is I promise you what I propose is more than logical, assuming, you know how to properly read a chart and put together a trade plan. But you can see here, nothing really happens, and then the price pulls back. And right there at around 36 is certainly a more than logical trade plan. You have some well-defined things there. Like I said, I'm not going to turn this into, wow, we're almost at 10 minutes already. So we got to keep moving. But like I said, for you ClayTrader University members, this Tuesday night on the live webinar, we're going to map out some stuff here. But right down around there, you can see that the price pulled back. And then from there, got the beautiful bounce, and up there it went. However, what I do like about this is kind of one of those situations where it pulls back right there. So I can see the majority of people probably being knocked out of the trade with the pullback that occurs right there. So have you ever been there where you get stopped out and then all of a sudden, boom, There it goes. So it is what it is, but still 10.8% move, which not a gigantic percentage, but keep in mind those CD rates. What was it, 1.7% for 2 years, or for 1 year? 1 year, 2.7%. And here you had, let's just say you only got 5% because you screwed up half the trade. 5% in a matter of a week or so, not too bad at all. But what I really like here is there's a foundational rule in charting. So here's a real life example that when resistances are broken, you want to see them act as support. So let's just see how this plays out. That resistance should now act as support. So check this out. On the pullback right there, hits the green line, nothing complicated, just basic charting. And then check that out, up it goes, and that's where it's currently sitting. So just a classic example of resistance turning into support. And, I don't know if any members took advantage of that one or not, but yeah, just a great example there. And then for our final one, is this thing waking up? That's kind of the category I created for it. Ticker TGRO. And now you look at the price. So we've gone from a $60 stock to a $30 stock to now we're talking about something below a penny, 0.002. And same premise, the volume all of a sudden kicked in, and it's one of those, especially in the world of penny stocks. Does somebody know something's coming? Is somebody loading up? What exactly is going on with this volume surge? So let's see if this was the start of something bigger or not. No, I had to change platforms here just because eSignal doesn't really get along too well with penny stocks, but this is TradingView. So here we are. You can see that was the opening day, and then after that, kind of quiet, but still the whole premise is, that volume. What was going on with that volume? And you can see it never crashes or anything like that. It revisits this, former area of lows, which there's a lot of history right around there. So again, plenty of opportunity for somebody to just take, a risk versus reward type trade. And then right there starts to show some life. You can see the volume kicks back in, and then boom, just like that. So somebody did know something was coming. So took advantage of that. You can't hide from the chart, volume exposed. So the nice thing was there was plenty of opportunity down around here to potentially pick up some shares if you desired some, and that was good for a 128% profit window. I say window because I'm not implying anybody played it perfectly or anything like that. But let's say you screwed up half the trade. You're still sitting at about 65%, win. So 65% for just a couple of weeks, not too bad when you look at the CD rates. Now, granted, these are penny stocks, so it's not like you could say, well, I'm going to put $10 million into this. No, have fun trying to sell $10 million worth of a penny stock. But I mean, from a more of a practical perspective, a smaller amount, that was definitely a very, very nice trade. So a couple quote unquote smaller percentage moves, but then an absolutely monster here with TRG or TGRO, and it all came about by just taking notice of that volume. So congrats to the members that benefited from this one. So I hope you are interested in joining. Just kind of a final few things here. If you are, just go to claytrader.com/inner circle, or just go to claytrader.com and click on the inner circle area. And the cost for all this is $99 per year, not per month, not per week, per year. If you do the math, that breaks down to $8.25 per month or $1.90 per week. So no excuses. That price is more than fair. And as I always say, I'm more than confident that over the time span of 12 months, you'll get at least $99 worth of value. But it's amazing what $99 will do to scare off the trolls and the pumpers and the bashers and all the drama. $99 filters out the clowns in a hurry, which makes it very nice. So, and finally, before I forget, there is the mobile app too. So it's not like you have to stay chained to your computer all the time. You can stay in touch no matter where you are. And along with the power profit scans, this is what we talked about. You also do get the live trading chat room, so you can hang out with me and other quality traders in real time during the day. So a lot of benefits. And like I said, you get all these benefits for only $99 an entire year. Definitely worth it. So sign up, and I'll see you on the inside.